Let's just go down here with this. Again, Bank of America tied for the highest on the street at 5,400. Last week, we even had Barclays raise their price target to 5,300. Those estimates imply another double-digit gain for the S&P, back-to-back years of double-digit gains. After what we've seen from earnings and also with even small caps, the market broadening out. Small caps hitting a 52-week high. Agree or disagree with this take?
I would say, I'm a slightly less as optimistic. So, my coming to this year is that we wouldn't get double-digit gains, but you've seen the optimism in the markets so far this year. We've been off to a great start. I think, roughly I do think we'll see some drawdowns, and it won't be straight linear to these double-digit gains, but little bit less optimistic. But there's a few reasons why. But I think, even looking at, you mentioned Jay Powell commentary and other things that are coming up, those are going to dictate the price going forward. And those are things that I'm watching very, very closely.
Yeah, you mentioned in your notes, you're looking at Jay Powell, and you look actually at a trifecta of things that might give us some insight when it comes to the Fed. Of course, 2 days of Jay Powell testimony. That's a lot of insight to the Fed when he's on Capitol Hill. But also the jobs report on Friday. So I do want to ask you, what do you think the jobs report is going to tell us that Jay Powell's just not going to tell us on Capitol Hill?
I think, the jobs report will just give us more insight into the strength of the economy. I think we've really seen a resilient economy so far and a resilient jobs market. And I think that still stays. And I think Dave Powell and the Fed have been also seeing that across the board and across the data. And that's what's led them to be cautious and kind of temper expectations for the market on when rate cuts would happen,
Right.
which for me, I was looking at sometime in spring, and now I've kind of pushed that estimate of that projection out to sometime in the fall. So those are things that I think we'll see from, both the commentary from Jay Powell and also from the jobs report coming on Friday.
You're not the only person pushing out their projection for those rate cuts further out. I think we've kind of gotten back to a situation where people think that good news is bad news when we get these stronger economic reports. In fact, Apollo's chief economist, Torsten Slok, last week, he forecasted no cuts in 2024 at all. So as you're pushing your cuts further and further back, do you see any scenario where we just don't even see a cut?
Possibly. I do think we may see a cut this year. And I think, those linchpins that we talked about are going to be, the driving factors. If unemployment, if we see that rise to a particular level, that's, obviously showing a lot of slowdown in our economy. And also, as you mentioned, if we see that headline CPI number continue to get closer to the target, I think those would be the areas where it would give the alleviation for Jay Powell to maybe make a rate cut this year. So
Okay.
I think the probability in my mind sticks that we do have some rate cut this year, but not till much later.
Yeah, it seems hard that we won't get one at all, especially because they signaled that happening this year. I want to get to some of your picks. You're actually looking at stocks that have pulled back, not only from their 52-week highs, that includes Tesla, it's about 32% off its 52-week high, but they're also off their 2021 highs. Even as the market goes to all-time highs now, there's still some pockets where you can get some deals. So give me your thesis, because you again said you're expecting a drawback. So do you buy these things that are down right now, or do you wait for the drawback?
Yeah. So yeah, the stocks that I see, they're off their highs slightly, whether it's 2021 or going even further back. From my standpoint, I'm looking at it. If we do have this continued rally, this continued market rally, there are areas in the market that have not thrown up as much as some other areas in the market, right? And so I'm looking at those areas that will probably catch a bid potentially when we see profit taking in stocks like Nvidia or stocks like Microsoft or stocks like Meta that have really, really gone really far up so far in this rally. So other stocks, as you mentioned, like Google, Amazon. Even if you look in the crypto space, Ethereum, those are areas that are off their highs, and I think catch that second rally if we continue to have kind of more of that straight line rally here.